When you watch finfluencers or financial YouTubers online, most of them only share all their successes and great investments, right? So I thought in this video, I want to reflect on some of my worst investments and then working my way up to my best investments and really give you a transparent overview of things that worked well for me and other things that really didn't work out too well for myself, but still were a great learning lesson. And hopefully you can learn from myself to avoid some of those mistakes in the future for yourself. Right, the first one is actually random stocks. Now I know what you're thinking, Kai, but you talk about all carefully selecting your shares and the companies you invest in. And yes, I do that now, but I had to learn my lesson. And in the beginning of my investment journey, like many, I just followed the herd. Whatever I read online in the news articles or I saw someone tweeting about or maybe making an Instagram or YouTube video about, I thought, well, that sounds interesting. Let's put my money into this, right? And honestly, I really burned my hands with this. This has probably been my worst investments. I mean, look at this. One of the companies I invested in at the time was Palantir. I think it might be a great company in the future. If you hold on to it for a longer period, maybe you will see some success. But here, if I go back since 2020, basically, I just bought in over here at the hype, right? Everybody talked about it. Such a promising company, what have you. And since then, they've just been on a downward trajectory. I believe I sold somewhere literally close to the bottom. I think it was around $10 over here. Then they dropped even further. Now they came up a little bit, but still, even now, many years later, behind the peak that they once had. So yeah, for me, it really wasn't a good investment. Same as a company like DocuSign. I mean, don't ask me why I invested into them, but yeah, it was just so hyped. And again, if I go back to that, also 2019, it saw such a hype over here, you can see, but then it just dropped significantly. I don't think there is real value behind that. It's an online digital signing company. I mean, really nothing fundamentally, revolutionary the company offers. And I just invested to it because I read about it. And another company was PayPal, which you see the same trajectory over here. They've been absolutely crushed. I mean, on a 5-year period, they are down 49%. I mean, absolutely mind-boggling. The good thing is, into all of those, I didn't really invest too much money. I was just dabbling around a little bit with small positions, but still, it was a painful experience. Losing any kind of money is always painful, and I really learned my lesson that I have to do my own homework, my own due diligence to really understand the company, because that way I can build up conviction, and even if it goes down, I'm convinced that long-term I see the value, right? Rather than just investing because somebody says you should invest in, and then, that person disappears and moves on to something else, but I'm stuck with my investment going down and down and down. And that's not something that's good, because then eventually you will sell it and you will materialize the loss. And that's the problem, right? If I would have held on to potentially Palantir another 10 years, maybe I'll be in the plus, but I just didn't have conviction in the company anymore. And that's why I moved out of those. And actually since then, don't own any random share anymore that I don't know anything about. The next bad investment has been my Memecoin trading. Now I always said to people to stay away from it because it's extremely risky and highly volatile. I started playing around with a couple of those. That's always the problem when you have success early on. I turned 6,000 euros into 16,000 euros in a matter of around 3 weeks. So of course you get very excited, right, to make so much money. However, shortly after that went down to I think 1,500. Now I'm back at around 4,500. So I'm sure I'll get back my initial capital and plus a little bit, but eventually I'm definitely gonna pull my funds out because it's extremely risky and you really kind of trade the sentiment, right? There's no technical analysis, there's no underlying assets, you can't really have conviction. It's really the community that you're investing in. And while I do see some potential in it, because obviously there's so much crazy dumb money almost flowing into these markets right now because it's so hot, we're in the crypto bull market. So that's why a lot of money is flowing into it. So I want to capitalize on that. I'm sure I'll still make a bit of money, but while doing this, I actually learned a lot about the crypto space, decentralized finance. So I really take it as a learning lesson. So I find it quite interesting and really something I study and spend my time on. So that way I much prefer that than, as I showed you before, those random stocks that I literally just bought because somebody told me. And that's the worst, right? Here, at least I'm doing my homework. I'm seeing where's culture, where's attention going, and I'm trying to time and trade that intention. And let's see how it turns out. But I'm enjoying it and obviously not risking more money than I can afford to lose. Right, the next one might surprise some of you, and these are my dividend stocks. Now, don't get me wrong, obviously I made quite a bit of dividend income over the years. You can see that over here on GetQuinn, which is my investment tracker of choice. Really cool tool. And yeah, you can see over here basically how my income grew over the years. And yeah, really nicely to see this year alone, I will make around $1,400 in dividend income. That's really nice to see, obviously. However, if we jump over to Interactive Brokers, which is my main broker of choice, where I have the biggest part of my portfolio, I can click in the portfolio over here and you can see I actually trimmed it a lot. I used to have way more stocks and ETFs over here. I really consolidated a lot. But right now I still have a couple of dividend shares left. And these are actually Pfizer and 2 real estate investment trusts. Realty Income, and Vici. And sadly, you can see all three of those are very much in the minus. That's in dollars, but yeah, they're very much down, right? So that's of course painful to see. While I'm getting the dividends paid to me, overall price return has actually not been really impressive. And that's often the case with a lot of those dividend shares, unfortunately. I also used to own Coca-Cola before, really a dividend king, has been paying and growing the dividends for the last, 61 years. So really impressive, pays a sort of moderate dividend of 3%, so really quite nice. But when I look at it overall and compare it to the S&P 500 in total returns, so including dividends, over a 10-year period, for example, I can see that the S&P 500 returned 230%, while Coca-Cola only returned 108, so less than half. And that's been the case with most of the dividend shares I own. And actually, I know I haven't seen too many that really outperformed the S&P 500 over a longer time period. So while it's nice to get that passive income, overall, I look at total returns, and here I have to be really honest to myself, it hasn't really performed as well as I would have hoped to. With this, we come to P2P loans. So this is basically where you become the bank and borrow the money to other people, which otherwise can't really get a loan from a traditional bank, and therefore they get the money without much credit checks, and of course that's more risky, right? I used an Estonian company called Bondoro at the time, and yeah, here I would be getting around 6.75% interest per year paid out to me every single day, and I could remove my initial capital immediately. So basically you as an investor take on additional risk because potentially the person may not pay you back, but of course the platform tries to regulate that. In return, you get a higher interest than you would get at your local bank account. However, for me, in times when I'm now getting 5.3% on my US dollars, to get 6.75% with a significantly higher risk, for me it was just not worth it. So ultimately I made some money from it, but mostly interest, right? So your capital stays the same. So I would kind of consider it a moderate or neutral investment. I haven't really lost any money. I made a little bit of money from the interest, but really overall nothing really great and nothing I'm really excited about for the future. And I think these ways, there are much better ways to earn interest on your capital. And that brings me to the next investment, which is the interest on my fiat money, on my euros and dollars. Now, obviously, it's not really an investment, right? Because you have the money anyways. But I always believe if you just have the money sitting in your normal bank account that I have as well, for example, my Lithuanian bank account, I would be getting a big fat zero. And honestly, that's just losing money to inflation. So what I've done is using tools that you see over here. These are apps and fintech and brokers where you can leave your money and basically earn interest, right? So that's what I'm earning and what they pay me on a monthly basis. Some of them even pay out on a daily basis. Of course, the percentages are annual based, but then obviously the payout is, as I said, either monthly or daily. And yeah, at least the money is working for me and it's protected. So I much prefer this here because there's also no lockup period. If I need the money right now, as I do for the renovation of our new apartment, so basically I can just withdraw the money anytime and use it for whatever I need to do. And honestly, I think it's a great option. Right now, I started shifting some of those funds into USDT. It's a stable coin. It's basically a cryptocurrency. And there I'm getting around 10% interest. So that's even more attractive. And I made a whole video about this recently where I stake my stable coins on Nexo to earn that interest. And honestly, it's a super simple way. Basically, you convert your fiat currency to USDT, which is 1-to-1 with the dollar. And then if you keep it on a platform like Nexo, you can earn up to 13% interest. So I think also a great way. And for me, once again, much better than going to P2P loan way. The next investment class that I tried out and actually had moderate success, I would say, are altcoins. Now, this is basically short for alternative cryptocurrency coins. So when we look at the biggest cryptocurrencies in the world, of course, the biggest one by far is Bitcoin, followed by Ethereum. These are the two biggest players in the space. And then we have some stable coins like Tether. I just spoke about USDT. So that's basically what I'm staking to get the high interest. But then we have a lot of other currencies that are considered altcoins, right? We also have some meme coins. So that's what I mentioned before. Things like Dogecoin, right? Or Shiba Inu and many other ones that just have literally no purpose, just to have a meme and fun, and you kind of invest in the sentiment. But a lot of other coins actually have a lot of value, right? For example, BNB, Solana, XRP, Cardano, Polkadot, Polygon was another one that I invested quite a bit of money in there. And honestly, with those, I did make quite a bit of return, not crazy returns, because I probably sold too early and in the end lost a little bit the conviction. But then I did end up making a substantial amount of money with this. And obviously I sold it, and with all the proceedings I made from it, I actually all turned it into Bitcoin, but I'll come to this a little bit later. For now though, I don't hold any altcoins, but I might come back to this and actually add a little bit more of certain coins to my portfolio because I'm starting to see some real potential in some of those. And given that we're still in a macroeconomic bull market in the crypto right now, I think there's definitely quite some performance over there. We could potentially even outperform Bitcoin. Then we move on to the next category, and these are individual tech stocks. Now, those are companies that I actually researched and really studied. And here we talk about some of the most valuable companies in the world. And namely, it's actually been three that really did the best for me: Microsoft, Apple, and Google Alphabet. Sadly, I did not invest in Nvidia. I probably would have had way better returns if I did, but still, even with those three companies, I really managed to really have a 4-figure return from those. I didn't really have a huge position in them because I don't like to have too much money in individual shares, but the money that I did put into them, I really got some nice returns from them. I'm really happy that I did. And you can really look at the top 10 companies in the US. I mean, those are the ones that are really pushing the S&P 500 forward, right? So yeah, if you would have invested into most of those individually, you definitely could have potentially had outperformance of the S&P. By now, I actually sold out of Microsoft and Alphabet. I still have a little bit of Apple, but potentially very soon I'll be selling out of that as well and actually merge it into my S&P 500 holdings. And this actually brings me to one of my favorite investment class, that's investing into the S&P 500. You can't, of course, directly invest into the S&P 500, so you have to invest into an ETF. I choose the SPDR S&P 500. UCITS ETF, or short SPIY5. It has a total expense ratio of only 0.03%. It pays me out the dividends every quarter. It's fully replicated. The fund size has been growing quite a bit because they are now the cheapest S&P 500 ETF in Europe, and actually in the world that I found. 0.03 is really, really competitive. So I think more and more people are going to follow that because obviously the less fees you pay, the more returns you'll be getting. And you can see over here the stock change where you can buy it. I'm actually buying it right now in London in US dollars, but you can see you can also buy it in Europe, in euros and other places. So different choices. These are of course the top 10 holdings. And as I said, I sold out of Microsoft and Alphabet, but by owning the S&P 500, I still own those two. And of course, I also benefit from the recent rise of Nvidia and other companies. And that's the beauty of investing into the S&P 500. You benefit from whoever is doing well. You're really betting on the winning horse, so to say. And yeah, honestly, that's been one of my better performances for sure. It's really passive. I just buy every single week a bit of S&P 500 ETF, and that really returned me really well over the years. You can see over here, I have my two S&P 500 ETFs. I used to start with the VUSA, which is the Vanguard one, but it's slightly more expensive at 0.07%, and it's in euros. So I started with that, but now I'm only buying the top one over here, the SPY5, as I said, but both of them already nicely in the plus, and literally by doing nothing, just putting my money there, set and forget it. I don't have to worry about it because I know long term the US economy is going to continue to shine. I have no doubt about it. If they will collapse overnight, I think we're going to have global issues, and then all other investments would suffer as well. But as long as the US is doing well, I think the world is doing well, and I'm really confident about it, and definitely will continue to dollar cost average my way into this and build it up long term. And even better, they still pay me a dividend as well. Yes, it's small, it's 1.1%. Still, it's nice to get the payment. And if you look over here, I recently received $42 from one of them, and from my other S&P 500 holdings, there will be another, what is this, $50 or so coming up soon as well. So almost $100 every quarter just by holding it, right? So that also feels nice. Again, I'm not buying it for the dividends, but it's a nice benefit to get on top. With this, we come to my second best investment, and that has been my Bitcoin. Now, honestly, I've been probably way too late to the whole Bitcoin game. I was very critical at first and looked at it too many years. I wish I would have invested earlier, but I'm glad I did eventually. And even since I'm late to the game, my average cost basis is around $45,000. So it's not quite doubled since then, but definitely overall the returns I got from it in monetary value have been by far the highest out of all of those that you're seeing here. And I'm really happy with this. There you can really see how the portfolio grew over time. Sadly, it doesn't really factor in my cost basis because I used to buy the crypto on different platforms, then send it to and from my ledger. So unfortunately, cost basis hasn't really been tracked, but I know that it's roughly around $45,000. And I'm honestly really happy with this. As I said, I'm quite late to the game. I only started a few years ago to really get into it. And yeah, with this, honestly, the return in both monetary and percentage returns has been really, really phenomenal, and I'm really happy with this. And I'll definitely continue to dollar cost average my way into Bitcoin. And honestly, I wouldn't be surprised if one day we see Bitcoin at around 250,000, even $500,000, right? Some people said $1 million or even $8 million in the future, who knows? But 250,000, I really wouldn't be surprised if potentially it will still be in this cycle. And because one big factor is because it is a deflationary asset. You can see there will never ever be more than 21 million Bitcoins in circulation. The more Bitcoins you have, the more valuable they come over time. As the value increases, there's more demand for it while the supply stays the same. So yeah, I'm really long-term bullish in it. And obviously Bitcoin dominates the crypto markets, more than 50% market share. All the crypto value is in Bitcoin, with more and more institutional money coming in, pension plans, ETFs. Long term, I'm really bullish on them. And I think while the overall returns might come down a little bit from the crazy growth, obviously we've seen over the last few years, but I still think in the coming years, it will continue to outperform the S&P 500. That's my humble opinion. Of course, this is not financial advice and you have to do your own research. And lastly, maybe a little bit boring, but actually in my case, it has really been my real estate investments. I actually bought a couple of years ago in beautiful Dubai 2 apartments, actually one in each of those towers with the view you can see in the back, Burj Khalifa. It's a really beautiful area. It's up and coming. It's developing more and more. And when I bought it, literally there was nothing. It was all desert. And I kind of really blindly invested into it. It was really cool. It was developer finance. I didn't have to take any mortgage or loan. I had a long payment plan and basically didn't have to pay any interest. So that was really attractive and managed to pay it off over, I believe it was an 8-year period, both of those apartments, which was really nice. And now since then, it's been really performing very well for me and obviously pays me a very nice rent. The cool thing is the rent is paid 1 year in advance. So any tenant that comes in Dubai, it's very common that they pay you the 1 year rent in advance, which is amazing, right? Because then I can take the rent and then either invest it or already keep it in some high interest saving accounts in the UAE. I'm getting 5% on my money, so I can take all that rent, put it there and earn 5% really safely. So that's nice, right? The rental yield is around 8% currently, which is really attractive. And best of all, the apartment value also increased really the most. So right now, I just had a look, it went up by around 60% already since I bought it, right? Of course, nobody knows if it will stay like this, but long term, it has been doing well. And honestly, looking at Dubai, what's going to come in the future, I think that number will only continue to grow. There's more and more people coming. The growth of the city is absolutely unbelievable. A lot of the rich and wealthy people, they are fleeing places in Europe, in the US and other parts to come to Dubai to live an amazing lifestyle in a safe environment. The safe part is so important because you don't really have that anymore in some other Western parts. And of course, tax-free environment. So it's really, really nice. And honestly, when I look at the price per square meter, it's still cheaper in a way than, for example, the apartment I bought together now with my wife in Lithuania, which technically is more expensive, right? So it just shows you, comparatively to places like London, Paris and other places, I still think it's cheap, but I think 10, 15, 20 years from now, Dubai is going to have one of the highest real estate places out there because it is such a hot destination and melting pot that's going to continue to attract more and more people. So yeah, guys, I hope you find that interesting. It just shows you there's not one best investment, right? Because some of those investments have been doing well over some time, then others picked up later on. And then honestly, it has to work for you. Never follow someone's advice blindly. It has to work for you in your specific life circumstances, right? I mean, if you're just starting off, of course, buying real estate doesn't really work, right? Because it takes a lot of capital. So you want to start increasing your earning potential and put some of your savings into, for example, the S&P 500, automate it and grow that wealth over time. And then later on, you might take some of those profits or the entire amount and then shift it into real estate, for example, right? So again, there's no right or wrong. There are different ways to reach your financial goals, but probably all of us gonna make some mistakes along the way. And I'm sure I'll continue to make some of those mistakes, but I think it's important to transparently talk about these because I don't want to just present you all the wins that I have, but equally important to show you my failures. And I hope in the process, all of us can learn from it and become better investors. Next up, check out this video over here. As always, thanks a lot for watching. Stay healthy, get wealthy, and I'll see you in the next one. Ciao.